Have you ever noticed how one moving average works perfectly in one market condition and then suddenly becomes useless in the next? During a strong trend, a moving average based on the closing price might do a great job. But once volatility changes, the market starts respecting the high prices, the low prices, or even the opening prices more than the closing prices. The problem is that traditional moving averages force you to choose one source and stick with it. But what if the indicator could make that decision for you? Imagine having a moving average that constantly analyzes the market, compares current conditions to historical situations, and automatically switches between the high, the open, the low, and the close prices depending on which source appears to have the strongest predictive value at the moment. Well, that's exactly what this indicator attempts to do. In this video, we're going to take a look at one of the most advanced moving average indicators currently available on TradingView. We'll cover what this indicator is, how it works, the best settings to use, and a complete trading strategy that you can apply immediately. If you find value in this video, take a moment and hit the like button below. And if you're new to the channel, consider subscribing to stay tuned. Let's get into it. To get started, you want to first of all open TradingView and load any chart on any time frame. TradingView is the platform we're going to be using throughout this video. If you haven't signed up yet, you'll find a link in the description below. For this showcase, I'm going to use the 1 hour time frame of ETHUSD. Next, click on Indicators and search for AI Source Switching Moving Average. And you want to select this one created by Zeiierman. Once you add it to your chart, this is how it's going to look. Now, unlike a traditional moving average that uses a fixed source such as the close, the open, the high, or the low prices, this indicator continuously evaluates all 4 price sources and dynamically chooses the one that appears to be most useful under current market conditions. It does this using historical pattern matching, adaptive feature weighting, and a neural learning component designed to rank which source currently provides the strongest information. Let's take a look at the components. The first thing you'll notice is the moving average itself. This is the main line plotted directly on the chart. It behaves similarly to a traditional moving average, but the difference is that the input source can change automatically. So instead of always calculating from the close price, the indicator may decide that the high or the low or even the open price currently provides better information and decide to use that source instead. When the moving average is rising, bullish conditions are dominating. When it's falling, bearish conditions are dominating. A steep slope suggests stronger trend conviction, while a flatter slope suggests weaker directional momentum. The second major component is the AI Supertrend. This acts as both a trend filter and a dynamic trailing stop. During bullish conditions, the supertrend flips below the price and follows the market higher. On the other hand, during bearish conditions, it flips above the price and follows the market lower and lower. Now, the width of the supertrend can adapt based on model conviction, allowing it to become more responsive during strong trends and more tolerant during weaker conditions. In simple terms, the moving average helps identify trend direction, while the AI supertrend helps confirm that direction and manage the trades. Now, let's quickly explain the intelligence behind this indicator. The script transforms each OHLC source into a feature set that measures things such as trend structure, momentum, volatility, range position, mean reversion behavior, and slope. It then stores historical observations and searches for similar market environments from the past. These historical examples then vote on which source currently appears most useful. A neural learning component then provides an additional layer of directional analysis, while an adaptive weighting system continuously adjusts the importance of the different features. Then the source with the highest ranking becomes the active input for the moving average. The important thing for us traders is not the mathematics. What matters is understanding that the indicator is constantly trying to answer one question, which is, which price source is currently providing the strongest information? So instead of forcing us to guess, the indicator attempts to make that choice automatically. Now, Let's take a look at the settings. The first setting is the MA type. This determines the moving average formula being used after the source has been selected. You can choose between different moving average calculations depending on how responsive or smooth you want the line to be. Next is MA length. This controls the smoothing period of the moving average. Smaller values react faster to price changes, while larger values create a smoother trend line. Below that is AI source smoothing. Because the indicator can switch between open, high, low, and close, this setting helps smooth those transitions and prevent excessive noise. Next is memory depth. This controls how many historical examples the indicator stores for its pattern recognition system. Larger values give the model more historical information to work with, while smaller values make it focus more on recent market behavior. Analog count determines how many historical matches participate in the voting process. The learning horizon controls how far into the future the outcomes are evaluated. Analog spacing helps diversify the historical examples being compared. Learning sensitivity multiplied by ATR controls how aggressively future outcomes are classified. The next section controls the neural learning component. Use neural online training enables or disables the neural model. Neural influence determines how much impact that neural model has on source selection. Learning rate controls how quickly the model adapts. Huber delta adjusts error sensitivity during training. Next, we have the adaptive feature optimization settings. Auto-optimize feature weights allows the indicator to automatically adjust feature importance. Adaptation speed controls how quickly those feature weights change. Weight floor establishes the minimum importance any feature can have. Minimum rows determines how much data must be available before optimization begins. Finally, we have the AI Supertrend settings. Enables or disables the trail. ATR length controls volatility measurement. ATR multiplier controls the width of the supertrend. AI band adaptivity determines how much the AI model influences the trail width. For ETHUSD on the 1 hour time frame, I'm gonna keep most of the settings at their default values because the indicator was designed to self-adapt. The only adjustment I would consider is increasing the MA length slightly if you prefer smoother trend signals. Once you're done configuring the indicator, click OK, and then let's take a look at how to trade with it. Now, for a buy position, condition number 1 is that both the moving average and the AI supertrend must be bullish. The moving average should be rising, price should be trading above it, and the AI supertrend should be below the price. Condition number 2 is that price must pull back toward the moving average. We don't want to chase extended candles, we want the market to return to fair value. Condition number 3 is that the pullback must show signs of rejection. This could be a bullish engulfing candle, a hammer candle, or any strong bullish continuation pattern. Once all conditions are met, we enter a long position at the close of the confirmation candle. The stop loss goes below the pullback low. For the take profit, we're going to target a 1.5 times our risk. We let the trade run. And as you can see, ladies and gentlemen, the trade was profitable. Now, let's take a look at a short position. Condition number 1 is that both the moving average and the AI supertrend must be bearish. The moving average should be falling, price should be trading below it, and the supertrend should be above the price. Condition number 2 is that price rallies back toward the moving average. Condition number 3 is that the retest must show bearish signs of rejection. This could be a bearish engulfing candle, a shooting star, or another bearish continuation pattern. Once we receive confirmation, we enter the short position. The stop loss goes above the swing high created during the retest. Our take profit is going to be set at 1.5 times the risk, letting the trade run. And as you can see, the trade was profitable. Again, the AI Supertrend can be used as a dynamic trailing stop while the trade remains active. One thing I like about this approach is that it combines trend identification and trade management into a single system. Instead of constantly wondering whether the trend has changed, the moving average and the Supertrend work together to keep you aligned with the current market direction. A quick word on expectations. This indicator is adaptive, but adaptive doesn't mean perfect. The goal is not to blindly follow every signal. The goal is to combine the indicator with price action, market structure, and proper risk management. This is not financial advice. Everything shown in this video is for educational purposes only. Always do your own research and never risk money you cannot afford to lose. If you found value in this video, remember to leave a like, or better, consider subscribing to stay tuned for future trading strategies and indicator breakdowns just like this one. Thanks for watching. See you next time.